Hey Randy, how are you?
Hey, I'm good. How about you?
I'm great. Starting the Monday a little slow, actually. I feel like I'm forgetting things.
I know. Mondays are like that. You need to have
Yeah.
like 5 cups of coffee before you can really get it going.
Yeah,
And
exactly.
by the time you get it going, today's done.
Exactly. Hi everyone. So this is on the flip side with Randy and myself. The topic we love to talk about is money. And we just find that we have such a passion for it. We want to share our experiences and what we know with you all, just because we know how important money is. And I mean, if you don't think it's important, we help you try to understand why it's so important, right, Randy?
That's correct. Yep.
Yeah. So today's topic is going to be actually the market. We're going to talk about the market and just see how that impacts our money. What kind of money decisions should we be making with what's going on in the market? So Randy, do you want to start off with just telling us like what you think, how things are impacting?
Right. I mean, oh my God, there is so much going on in the world right now.
Yeah.
Like mm, on the topic of more like economically wise, right? And we hear talks of inflation. We hear about the war in Ukraine and Russia. We're hearing about the markets that are dropping, Bitcoin, interest rates going up, all these things going on at once, and the pandemic is ending. So everything right now is just a whirlwind of
Mhm.
things that are affecting the economy, which means it's going to be affecting your money, your dollar, your bottom line in some way, shape, or form. Look at gas prices, right?
Oh my
Uh,
God, it's crazy.
Absolutely nuts. I do think it's temporary for the gas prices, but that's just my opinion. But we never thought we were going to see the prices of barrel of oil right now at where it is. So
Yeah.
yeah,
Yeah, there's let's talk about, I guess, let's talk about inflation and the gas price. Let's start with that first. So you think actually it will go down? That's funny. I'm
but
kind of thinking that I actually am thinking not only will it, well, maybe I think gas is going up quite high, but I think if anything, we're going to see prices of other things actually going up more too. I think
yep,
inflation is going to start
yep,
going up and is
yep.
everything is going to start going up. Um, yeah, that's so you think the same thing?
Yeah, I think the same thing. I think the gas prices thing is only temporary because the war is going on right now between Russia and Ukraine, right? And Russia controls like what 40% of the world's oil, so that's why it's like massively affecting the cost of gas over here. So that hopefully it finishes soon and they can come to some kind of talks or agreement, because I think as you can see on the social effect, everyone is just thinking this thing is unnecessary. I don't know the in and outs and the history to a certain degree, but we can just hope that it's gonna end sometime soon. The gas prices will come back down.
Hmm.
But as you mentioned, everything else separate from the war in Ukraine is rising. The price of everything is rising. Whether it's you're buying a burger, whether you're buying, building materials for like our projects and stuff like that, or just regular other consumer goods, right? And then in turn, people's labor is going up. People are charging more because cost of materials are going up. So everything right now is going up, and I think for the most part, they are here to stay. The only thing that's going to really bring it down is interest rates, right? But then again, that's going to have such a big impact on the economy, because that is how we dive into like a recession, right? But we can elaborate on that a little bit later. But inflation, I think, for the most part, is here to stay. It wasn't transitory as the government was talking in the
Hmm.
beginning, right? So.
Yeah, I completely agree. And I also think like yeah, the war has something to play with it a bit. But I think, for example, with the war, I think how or I don't know if we should call it war yet, sorry.
Okay.
But
We shouldn't be using the word war, but yeah.
but but the conflict that's going on there, I think it will be impacting inflation just because I think we're not that directly impacted because, for example, what they export, like Russia and Ukraine, we don't really import their stuff. But I think because, like, let's say in Europe, they import a lot to Europe and I think some to the US.
Mhm.
Indirectly, we will get impacted, but I don't think we'll get as impacted as, for example, I think like Europe will get, like, we'll go through, let's say if we're going to do a recession, like I think they'll go into a deeper recession than we will. Like we may go through a kind of recession, let's say, but I think, for example, like places like probably Europe, just because they do a lot of are importing from those countries, that they may get impacted a lot more than we will if it stays like that, right? Because obviously, like if other countries start getting involved and making this like a bigger thing than it needs to be, then then for sure everyone is going to get impacted a lot, probably just like going to the max, like just like it'll be like a full on recession. But if it's something where they decide to like hopefully stop it, or not, and not be as like going into this whole World War III scenario, I
Right.
think they'll be mainly impacting
Yeah.
Europe,
So I agree
and
with that. So
we'll get like the little trickle effects,
right.
but I don't think we'll be to the extent of, let's say, Europe.
Yeah, yeah. No, definitely the conflict between Russia and Ukraine right now is massively going to affect the Europe and surrounding countries a lot more than it will us. But prior to the war starting, obviously inflation was already happening, right? Because of
Yeah,
the low interest rate.
and the money
So,
printing, like the
right,
combination of the two is just
and the quantitative
bringing it up.
easing. Yeah, so all of that was what was causing our inflations to go up, and for those reasons, inflation, I guess, is just it's an entire global thing.
Yeah. Yeah, no, definitely inflation. I mean, COVID made inflation definitely get started, but I feel like if things get bigger, or I mean, just the conflict right now is helping it become more. And I think, like you said, we can start talking about interest rates. Um,
Mhm.
I think for them to try to balance, they're gonna have to increase the interest rates a lot more than they have. Like this 0.25%, I I think
That's
did
just the
nothing.
first. That's just
It
the
was
first.
if
That's
but
just the
it
first, right?
Yeah, but it
Yeah.
hopefully, like hopefully in the sense of the economy it's the first, but then it's funny because I feel like in the real estate, because real estate's so important to our economy, it's kind of like finding that balancing act, right? Because if they do increase the interest rates, like, because I remember, for example, a good little test, I would say, of what's coming was the stress test, right? Last year the stress test happened, and in certain markets, the ones that obviously I was involved in, I
Yeah.
saw like a good 50K drop. As soon as the
Yeah.
stress test went up 1%, it did a 50K drop. And then you saw it starting to trickle back up again. So it wasn't like a drop and it stayed down or anything. Like it started
Right.
going up, but you did see a drop, right? So that's why this this 0.25%, I wasn't really thinking like it's not gonna do anything. And have you seen anything right now happen? Like I personally think that 1.25 really didn't do that much. Like if anything, I saw a huge jump up in prices.
Well, I mean, the first thing is we all knew it was coming, right? We expected it earlier on in the year, and they said they're going to delay it till March. So I think for that reason, and because it's only 0.25 basis points increase, that it didn't have the effect that right away, right? But I think once it starts to happen more frequently, and they're expecting anywhere from 5 to 7 different hikes this year. I think the war might change that, depending if they come to a resolution or not. Um,
In
but
which
I don't.
direction?
Uh,
Like going up more?
the war will kind of make them not want to raise it so fast, I believe. But they might still have to because inflation is still
Exactly.
huge.
Yeah, I was gonna say it's so hard to tell because I feel like the war will make inflation just go up, forcing
Right.
them maybe to increase the interest
Yeah.
rates.
So I think you won't see any dramatic drops in prices. I think once, how they say how you boil a frog, right? Just slowly, 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 then realize one day, like, hey, what the heck just happened? I'm boiling here, right? Yeah. So maybe after 3 rate hikes, people are gonna really see the dent, and the difference it's going to make, especially on some people's mortgages, the people that have variables. You're going to see how fast people are going to start to snap to lock these rates in,
Mm-hmm.
right? And I actually welcome it because these prices agreeably, even as a real estate investor who owns property, and we enjoy seeing our equity build and the prices go up on stuff that we already own. But in order to try to buy something, we're going to be hesitating, double checking, and we can't make really informed decisions because one price today is a different price next week, right? And for that reason, I want the market to calm down, maybe even pull back a little bit just to give some kind of correction, and so it can add to the stability.
Mm-hmm.
Um, but we got to see where things are gonna go. But I think that's really what's going to happen.
Yeah, I agree. I'm also kind of in the same. Actually, the only things that I have to say that I really worry about is like I do want them to also start increasing the interest rates, but at the same time, then I do worry about stagflation, which stagflation is basically your interest rate goes up, your economy basically goes down.
Yeah.
And so that's another thing. Plus with the war going on, like, the impacts of the conflict, it gets it again, if it gets bigger and stuff, it could be impacting in the sense of like that, like for example, like if Europe is the most impacted, maybe for example they can't receive, like get the imports from Canada as much, and then because they
Hmm.
can't receive those imports because like that, just like the economy is not good there because they're going through the recession, then again, then we do get like impacted because then obviously then we don't need as many employees because we don't we'll be creating too much more than we need to sell out, right? So my worry is actually like the stagflation, and that we're going to be kind of putting the economy, if the economy goes into a halt, because I don't think that it's going to cause the price. I mean, I think we'll see maybe like that if something like that happens, the prices go down, but it's gonna be like countering, right? Because prices go down, but inflation is going up, and it's going to probably counteract each other. But probably what may happen is the prices of or like which we're starting to see already. I don't know if actually I'm curious to see if you're seeing it. I'm seeing it in my side here, like in Hamilton. Um, I'm seeing that houses are taking a little longer to sell now.
Yeah, because what happened was people a lot more houses came on the market, right? It's spring market, right? And typically spring was a boom, and I think because January, February, winter months, there was still low, super low inventory, right? Which is why the prices skyrocketed. And I predicted this back in maybe about September. I knew exactly that January and February is going to be the highest market seen on record. But I strongly believe that come summer, things are going to change, and that things are going to come back a little bit, come down from where they are right now. You can post this maybe in a few months. Maybe we can do a Gary V. Look, I told you guys so. Right? But that's my opinion, and that's exactly how I feel. Right now, as you can see, the weather's getting a little better. A lot of people want to cash out on their investments. They want to, sell in the city and maybe go buy something smaller, um, outskirts, right? So a lot more inventory I find is going to be coming on the market because a lot of people want to take advantage, and for that reason, with inventory, prices will, come down a bit. Houses will take a little bit longer to sell, and I do see that happening over here in the Durham market. I know you're out a little bit further west, so I do see that happening. Um, but I think because we are talkers about money, we should you know maybe talk about what we think that we should do in the upcoming months or even
Hmm.
now to either offset as investors, or where do we see the next boom, or whatever the case may be. Like how do we navigate the terrain of the economy, of money, of inflation, of all this coming? What are your thoughts on that?
Yeah, that's a hard one to be honest, because things are so like this. And because, for example, like that, because inflation, I feel like you shouldn't really keep that much money as money. But at the same time, because of like what's going on, like even if you put your money in mutual funds are like stocks, like all these things are, I feel like they're, if anything, more volatile than real estate. But real estate, you have to have like such a big amount of money to put put into money, right? So
Right.
it's just kind of like, to me, it's a bit of a conflict. Like,
Well,
yeah, because let's say,
even the people that are looking to buy real estate, let's just say they have the money to put into real estate right now. Like, would someone right now buy in this market? Would it be a good recommendation? Um,
I would
this is a,
say so.
you would say so?
I would say for people that are going to do long-term buys, um, I would say, to be honest, it doesn't matter when you buy, because in the long term, you're always winning anyways, because money is always getting devalued anyways as time goes on. So that means the
Right.
price of houses are always increasing. But I would say that, like, if you need to, like if it's a primary residence and you need to, but I would say also on the other side, like what I'm doing right now, like I'm actually in a huge like research period. I'm
Hmm.
actually like trying to like, look at the market, just seeing what's everything is going on. Like you said, I'm trying to see where the next boom is. Cause I could also say like, yeah, we do have, let's say we'll have like, let's say a global recession, but within those recessions, there's always little places that will be booming or things will be going on. Maybe not the
Right.
booms that we've seen in these last few years, but we'll
Right.
see places where it's worth it to put our money in and either do, let's say, a flip or whatever it is we do. Like you still find it. It's just you really have to look for it. And like that, like I feel like looking for it is very hard these days. Like you're looking a lot more. What do you
Yeah.
think?
Yeah, no, 100%. This, I would say, is the time not to rush into anything, right?
Hmm.
This is the time
Yeah,
to bunker down on your DD. You double check and triple check your numbers. And now this is where we get into more fundamental things, right? Because I would say the past 2.5 years, honestly, you threw a dart and you were going to make money, right? And like you bought something $100,000 overpriced. Within 2 months, you caught back your value, right? And I think those days right now are coming to a halt, if not has already stopped. So you got to
agree.
be really careful now and making sure that anything you buy, especially real estate wise, that and if you're going to be an investor, it's a solid investment. Meaning, even if there is going to be a little bit of a hiccup, that it's going to stay true based on its revenue, right? So for me, if we're going to talk to people who are looking to get into real estate, I would say this is a scary time to get into single family, if it's not going to be your principal residence, right?
100%.
So me personally, I wouldn't be buying any single family homes right now as investment properties,
Yeah.
right?
Even for flips, right? Even for flips, I'm not looking for, like, I'm looking for something that I can keep just in case I can't sell it. So even like
Right.
on flips, I'm doing the same thing. Like now, like, because my last two have been single family homes actually. But now
Uh-huh.
I'm like, zero interest. I'm like, we're going for multiple units because it's just kind of, like you said, you don't know what's going on. So you want to at least, if I can't do a flip, I can still hold it. and
Right.
and I'm not, let's say, suffering like I probably would if I had to like rent out a single family home.
Right, absolutely. So you want to make sure that you're going to be covered by positive cash flow coming in, with multiple units being rented out. But if you're a person that maybe is not buying real estate, or maybe you just sold and you cashed out on some flips or on other rental properties, like what is it that you're going to do now? My opinion is this is the time to really focus on cash flow. Um, so or businesses that are already producing, generating income, right? Um, you can buy the golds, as everyone says, which is, if you want to buy some Bitcoin, these things are going to be great hedges against inflation. But I think if you want to get your money be a little bit more active, it's going to be the time to purchase stuff that are making money. If it's not making money, this is not the time to
Yeah,
guess to maybe take a chance.
exactly. Like I would say definitely, because I've seen a lot, like you said, you see a lot of people do this. And like, to be personally honest, I find these people crazy. But like doing that shooting in the dark thing, like you see a lot of people fudge the numbers. They like try to make it work.
Yeah,
Don't do that. This is
you can't do
not
that,
the
man.
time.
You can't do
Like
that.
if you're on property number 20, still trying to get the numbers to work and it's not working, it's okay. This is the time to let it go, because I know a lot of people back in the day, it's like you try the fifth one, it didn't work, and they're just like, whatever, you fudge the numbers. I can probably get the renovations instead of 30K, I can do it in like 15. It's okay. And then they screw themselves over. But like you
Right.
said,
Yeah.
the economy has been helping them. I don't think
Right.
this is the time to fudge the numbers and think that you can do it. Because even in
Yeah.
multi-units, like a lot of people are doing it a lot, even in the long-term holds. They're like, oh, you know what? We won't consider property management. We won't consider this. We won't consider that just to make the numbers work.
Yeah.
Guys, this is not the time to do it.
It's not the
This is the
time.
time to keep your terms and criteria there. Yeah, like you said, cash flow, 100% very important. And actually, what would you say the amount of cash flow you'd want, let's say, per unit?
I think that's a hard question to answer because it depends on your goals as a person, right? It depends on the market that you're in, whatnot. Everyone loves that 1% rule, but I think that's getting a little harder now.
Yeah. But I mean,
Um,
like non-existent here.
yeah, exactly. But people like to shy away from answering this kind of question. But honestly, if you can get, $200 to $300 per unit as cash flow, that's kind of like a safe zone,
That's
right?
funny. I was gonna say the same thing. Around, yeah, 200-300 I feel like is safe, because at least like that per unit, if you have to drop your rent like 100, 200, I don't see it going any more than 300. Like that would be
Mhm.
way too much of a drop, especially
Yeah.
like that, because inflation's going up, so rents will
Oh, but
probably
I
go
think
up.
right now rents are not coming down. Like rents are
Yeah,
going to be higher. Rents are going to be higher in this environment. Yeah.
yeah, that's what I was saying. Like inflation, because of inflation, everything, rents are continuing to go up. But um but yeah, I think like 300. I was also thinking like what would the number be? I would say 300 for me, like 2 to 300 makes sense, because if something were to happen, at least you have that cushion to like
Yep.
get to a break even state and
Hmm.
not be so like, again, going into a negative cash flow. And like imagine, something happens and then you can't also put in money yourself. Like you just,
Oh,
or if you have many properties, and then imagine if they do all of them
yeah.
do this.
Negative cash flow plus a dip in equity, dip in your value. Uh,
Yeah.
you're on the
Yeah.
water.
Yeah, exactly. It becomes a very scary situation to put yourself into,
Yeah.
and like that a lot of people are doing it, and which has been for us very hard. Or I'm saying us as in if I know what your area is doing, but for me it's been very hard to find like those next good deals. And I think like that, if you're not in a rush to buy, like if you don't need to buy, like you said, take your time. Like I feel like the only people that may need to buy are, let's say, people that are getting into their primary residence and need a place to live. I say like,
Right.
fine, go do it. You have to. Like that, like you're gonna keep it for a long time, so it doesn't matter because you'll get your money back in the
Hmm.
future. So it's not as if it's gonna really kill you now doing it.
Yeah.
Um, but for those that can wait, I think doing like what I'm doing, like I've been just in a hardcore research.
Hmm.
I'm just like figuring out what the hell's going on at the economy, trying to do predictions, these
Right.
predictions, and seeing like what is going to happen, how is this going to impact us, um, and just see, yeah, just see what's the best decision to do,
Yeah.
to
Yeah.
make.
Yeah. And now is a good time to also consider lending. If you didn't lend before, right? I would say now is a good time to consider lending because money's going to be a lot harder for people to find, right? And I think you can make a little bit more money, especially in this environment.
Mhm. But again, being safe with your decisions on lending.
Yes, don't be lending
It's
on a property that's on the water. Be careful.
doing
Yeah.
your research and just making sure you know what they're doing, because a lot of people ask for money that really don't know what they're doing, and they're just kind of like that, like fudging the numbers. And I mean, always having obviously a good broker to help you out helps you make sure you make your good decisions.
Mhm.
um but yeah, that's an interesting point. But actually, for example, someone was talking to me, oh, do you think there's going to be like a huge amount of foreclosures happening, um if we get like with all this going on? What's your opinion on that?
Good question. Answer is I don't know. Right. One thing I'd like to say about the Canadian banking system is that they're pretty good with kind of preventing that kind of stuff. But it does happen, right? And what I would say is just because these last 2 years was so crazy and such unprecedented times that anything is possible from here also. Honestly, the exact reverse can happen. But because we live in Canada and Ontario, I think that we are backstopped by the demand for housing, right? We're still in an environment where, you know, people can't find homes, not
Mhm.
even just to buy, but even to rent, right? And that's the one, I guess, variable that will keep our housing market a little bit more stable. Um, so our foreclosures coming, maybe here and there, right? But it's very hard to say.
But since it's interesting, do you just do flips, right? You're just a flipper, or do you do also like BRRRRs or buy and holds? I forget.
No, man, I hold. I hold.
Wait,
I Yeah,
oh, yeah.
I've
Okay,
yeah,
no, because I was gonna say I don't know, because for example, like we're actually in the process of finding a tenant,
right.
and so we've been having something interesting happen this time around, and we are still getting lots of applications, but we're not getting very many qualified, not qualified as in, or I mean, we're struggling to find qualified people, but even just the people to want to apply, like I'm
Hmm.
starting to see at least hesitations um in the area. But I see, for example, I see a lot of people actually, we've been getting lots of people interested. It's just a
Hmm.
lot of hesitations, and people like love the property because it's obviously like newly renovated, so
Right.
everyone always loves to see it. So I'm kind of, I was, if we were to see foreclosures, and the only reason why I'm saying that is just because of what you're saying, about
Housing
like there's a
demand.
lot more need for houses and stuff and
Hmm.
rental properties. I think there are, but I'm kind of curious to see like that. Like if we go into a recession, I would guess though we're gonna see a lot more people kind of banding together. Like I have seen, for example, that happen where there was a group of like three couples that wanted to live in the unit. And I was like, yeah, like no, that's too
Yeah,
many
yeah.
people. It would cause too many problems with the other tenants I knew, and I was just like, I can't do it. But I feel like maybe banding together of a lot of more people to try to deal with the increasing of rents will
Yep.
happen.
Yep, that's gonna happen. I mean, a lot of co-living, cohabitating, a lot
Yeah,
of rooming situation, a lot of rooming housing situation, I think are gonna happen, right?
yeah,
Because people's really affordability is not that much, right? And you gotta do what it takes.
yeah.
Um, a lot of people are going to stay at home with mom and dad for a lot longer. People are going to start finishing their basement so they can have, family members stay there and whatever the case may be, right? So these things are always going to happen, especially with the way prices are going and
Mhm.
with rental prices. So people are going to try to figure it out first, but
Yeah.
life happens,
Mhm.
and immigration is still happening. So
Yeah,
no,
actually, there's a huge surplus coming in, like 400,000 just in Ontario.
yeah,
So
how
it's,
many
yeah,
people are
it's
coming
such a
in?
conflict to figure out, because like I was gonna say, if we do, for example, if we do see more foreclosures happening, you know who I guess it would happen to?
Who's that?
It would happen to first time home buyers that bought in the high market,
Mm-hmm.
that bought it. So in the last 2 years, like these kind of people would probably get impacted. Investors that have
Mm-hmm.
been over leveraged and playing it lucky or whatever,
Yep.
and that are holding properties that they're negative cash flowing or whatever. I think
Yep.
these two groups of people will get impacted in foreclosures, or maybe not getting to foreclosures, but having to maybe sell, let's say,
Right.
with maybe
At
losses
a
or
loss.
not,
At a
but
loss.
having to
Yeah.
but having to get rid of it
Yep.
because they can't handle it.
Yeah.
I don't think, for example, people who have been living in their houses for a long time, I don't think they'll have problems because their
No.
mortgages, because of the increase of prices being so
Yeah.
high,
Their
their
equity is
mortgages
so
are
their
like
equity is
this
so
now.
yeah. Yeah.
Yeah, their mortgages are like this. So even if they did need support, they could take out of their properties. Or, I mean, if they do decide to sell, they're selling, but they have like a good cash surplus coming out of it. Like these people will have a lot more options available to them. People that have already owned and then let's say either sold and then bought another house. Because usually when you, even when you sell and you buy another house, those people
Yeah.
have like at least a 20% down, if not more,
Right.
because they've made so much from their previous house and dumped it into their other house.
Right.
I
So
feel
yeah,
like
so some people are definitely gonna have that cushion, right?
mhm,
And like to your first point, some people are not. The people that don't have that cushion are people who bought in the high prices. However, a lot of these people right now can afford it because they bought now and they got approved now, right? But um, and they're gonna lock it once these interest rates starts to go up. They're gonna lock in, right?
mhm.
They're gonna lock their mortgages in. So you gotta watch out for that. Those 3-year locked-ins and those 5-year locked-ins. It's gonna be what's gonna happen after those rates. If in 3 years, when they bought their house, the rates were people are getting like 1.5 percent interest rates, 1.99. Like my first house, I was 6.5,
Oh
right?
yeah.
Right, 6.5. And so I would say that, some people are going to be more equipped and they're going to have the equity, but the people who are not, I don't think it's going to happen immediately. If the rates continue to hike and people are locked in, and when the mortgage comes to term, whether it's in 3 years or 5 years, whatever, that's when you're going to see maybe some instances of some foreclosures and whatnot, or people that are forced to sell either at a loss or in an environment where there's just so much stuff on the market that it's a buyer's market essentially. Yeah.
Mhm, mhm. Yeah, yeah, I completely agree. So I think like that, but like you said, I think these things will take time. So I can't say that we're gonna see foreclosures come quickly or anything. That naturally always takes time. It's much
Mhm.
more delayed after, like, once you see things happening, it's
Right.
like after effects.
Right. And the banks, though, the banks are also the main banks. They are also lately they've been, everyone's like, oh, the banks are doing well. They have less loss provisions and whatnot. So that means that the people who they're lending to are becoming more stable, and they have to put less away for their safety net. So those when you hear those kind of things, you're like, well, maybe we're not in such a bad. But honestly, me, I don't believe anything I hear
Well,
from media or the
actually, a
TV.
change I have heard about that was kind
Yeah,
of interesting to me,
yeah,
multi-units, five
yeah.
plus multi-units. So before you could get like CMHC financing, or CMHC, like the insurance for
Insured
higher,
mortgages. Yep,
for the higher financing, LTV loan, yeah,
yep.
LTV. And now they're being a lot more strict. So, and for example, now they need to see that you have 6 months or a year, I think 6 months worth of bank statements. And you can't do that when you buy it, right? Because it needs to be your bank statements. So you
Right,
have to wait 6 months or a year, I can't remember what the amount was, for you to prove that you're getting the money that you say you're getting. So
right,
to me, that seems kind of interesting, because doesn't that mean you're seeing something going on that you don't trust, that the money that's coming in is actually coming in, and like they won't even accept the previous owners, but like they need to have yours now,
right.
like you as the
So what
owner.
you're saying is that they need to see that you have the capability to carry this place for 6 months, or that the current rents that you're getting already is sufficient to carry the mortgage for an approval.
Yeah, they want to my understanding is they want 6 months worth of your bills and expenses and income. So
Okay.
um so for example, like that, so a lot of people, let's say, on getting, like, let's say CMHC, they can't get it right now. They have to wait 6 months to do, or longer, to do the refi, to do,
Oh,
or
okay.
like, and just get a refi and then take advantage of it at that time.
Okay. Yeah, I haven't heard about that so far. So I guess maybe that's something to look out for. What I
And it
did,
just makes you question, right? What's going on in the market for them to make those changes.
a lot of it though is regulatory, right? These governments really want to ease this housing market, so they're going to be enforcing a lot of mortgage rule changes. I think I heard something like they're going to want people who are buying secondary properties or investment properties to be putting down 35%, as opposed to just a minimum 20%.
Mm-hmm.
Um, for a lot of us, we are putting down 30% anyway because we're getting some commercial mortgages and whatnot. But I think they're going to make it more of a widespread thing, more of a blanket thing. So that's just what I heard. I don't know how true that's going to be, but we'll see.
Mm-hmm.
Yeah. So, I mean, I don't mind them doing certain things to curb the growth that's been happening. I just don't like when the government injects themselves too much just because someone is crying that they can't afford houses at this prices, right?
Mm-hmm.
Like I do understand that what's happening in the last 2 years was just dumb, right? It was just dumb. But
But that, I would say, for example, that was like a balancing act, I would say. Like, it was very interesting because it's like, so the government made the house prices go up by, or I mean, in my opinion, I think the reason why prices of houses went up is because they started giving everyone money,
right,
right? And then so prices went up because people who know about money are like, okay, if you're printing all this money to can't like all the Canadians, or like a good, not all, but like a good percentage of the Canadians, that's causing inflation, right?
right.
And then houses have always gone, like, what is it gone, like they're always more than the inflation. Like they've always
Yeah,
increased
they've always
yearly
done
more than
better.
what inflation is each
They've
year.
done better than they've always done better than inflation. But honestly, in the year is in the 2 years, house prices have doubled.
Yeah,
Right?
it's insane.
Like in my area, what was 500,000 now? Well, back in beginning of 2020 is now $1 million, easy all day. So 2 year double. That's not just beating inflation. That's
No, no, no.
literally
Yeah. But I think, oh yeah,
inflation.
that's crazy. But I think this money printing like spawned it and like put people into like the crazy fear. Like if you guys are gonna just start printing money, I think it's like it brought a lot of fear in investors, like people who, especially cash heavy people who have tons of money,
Hmm.
um, probably scared them a lot, right? And then started, putting out money, like putting
Yeah,
money into places like a house where it's like at least it's a house. It's not like a stock
yeah,
that it can just
yeah. This
fluctuate at
is
whatever way it wants. Like at least you have a physical thing that
Yeah,
takes care of
definitely. And back to what we were saying, it's a while ago, tangible assets now is the key. Make sure that it's tangible. It's not something that is, stocks and bonds. It's not tangible, right? Unless the company that you're investing in is producing a product that has utility, that has use, that has, everyone loves the word dividend, but just be careful what you're buying right now.
Yeah. Or even like essentials, right?
Yep.
Like things
Yep.
like food, if it's stocks related to foods, or I mean oil, I guess, like things that you actually need to actually live your daily life. Like if you're gonna go for that, because like that, like I say, for people who don't have that much money to, let's say, buy a place, um, I feel like it's still better, to be honest, than keeping it in cash, because like I think inflation is just gonna start going. I don't think we're gonna do like a ching like all the way to the top or anything. We're not gonna pull
Yeah.
one of those, but I think our money will be devaluated enough for it to impact us. And
Right.
and I mean, like that, you see it by the prices of things. Like imagine like if our food's gonna probably increase in value, and if your income is not increasing, right? But all our expenses are increasing, that's inflation, right?
Yep.
That's us.
Yeah.
Like our money is now not worth enough, right? If we were making $1,000 and we're used to spending 200, now we're maybe spending like 500.
Yeah.
That's just cutting things, and it could be for some people that could be super tight.
Yeah. No, definitely. Yeah. No, definitely. This is not the time to be holding cash. This is not the time to be holding cash at all. Cash is not doing you any good. So that savings that you have, your savings getting less and less every month. So no
Yeah.
cash. No cash.
What would you advise for people that, let's say, can't buy houses but have some cash?
Um, and to be safe,
It's
lending.
hard, right? Because it's like
Lending.
the economy is like this. Oh yeah, lending. You're saying lending.
Yeah.
Yeah.
Lending.
but
Yeah.
with the caveat of that you need to understand lending.
Yeah, yeah. Don't just lend. Just don't lend to lend because Randy says, "Hey, we should lend." Who wants more?
Exactly. Oh, you got muted by accident. Sorry, you said the last part, you got muted.
Yeah, yeah. Just be very cautious. People love gold. I would say that's still always going to be historically a good hedge against inflation. So, um, and that's buying the actual physical gold. I might
Yeah.
sound like Robert Kiyosaki right now, but not these gold companies and these mining
I
companies per
would,
se.
yeah, I was gonna say I agree with you. Physical gold is better because companies are the same for gold. They do like the spikes up and then they're like down again. If they find a place, they spike up and then like once things go, they go back down and just trickle to whatever their normal number is. So it's like at least
Yeah,
physical gold, like you have it.
yeah, exactly. I'd buy a pack a skid of lumber right now before I held cash.
Seriously, it's going up again.
Seriously, seriously.
What
Yeah.
what are do you know what it's at right now? Actually, I don't know what it's at, but I know that it went back up again
Last I seen was at
3 months ago,
$7.
I think. Yeah,
Like a two
okay.
buck
So it's
buck.
still so at least the last 3, 4 months has been around. Yeah, we see it at like around $7, $8 for like
Yeah,
um a two what is it? A two
two
by
by
four? There
four.
we go. I can't
Yeah.
remember things.
Hmm.
Yeah, that's it. Yeah. But I think yeah, it'll probably go up more.
Hmm.
But yeah. Well, can you imagine actually? So for our flip in Toronto,
Yep.
we bought a lot of lumber, like a lot. We basically rebuilt the house. Like that's how much
Yeah.
lumber we had to buy. So the basement was the last thing we got done. And so we happened to have the skid there. And then the price went like from $15 shot down back to 4 all of a sudden. And then
Jeez.
so we're just so then first my husband goes like, let's see if I can get like if I can like return all the lumber, like get a discount on all the receipts. And then
Right.
so they go and they say, no, you have to bring the skid with you. So we're like, okay, at least we have one skid that we can make. We actually saved like $1,000 on a skid
Yeah,
of lumber. Like
I
that's how
believe
much
that.
of a difference it was. Like, so can you imagine? Like, I don't know how many skids we had, but we spent like a lot. Like, we went like crazy over budget because of like the prices of everything just going up last year.
Yeah. No, no, I believe it for sure. The things went up to here and then went down to there. So if you can return something that you bought at a high price, yeah, you can, and then yeah, you can save back some money.
Yeah, but we didn't return it. Like we brought it to get the discount because we needed it. Like we didn't have
Okay.
the basement wasn't finished, but we are
Right.
just like if we can at least save some money, we're
Yeah.
happy. And so we went there, or he
So
went
basically you
there.
did a return and buy.
Yeah, we returned and bought.
Yeah, definitely.
But
Mhm.
yeah, it's crazy. Um, but yeah, so I think I think I'm curious what people say. Let us know what your thoughts were on what we said. Curious to hear your inputs on how you think the market is going on what we've said, on do you have any advice for people who have money, small amount or large amounts? What would you tell them to do? We're always curious to hear what you have to say or ask us any questions that you have.
Yep.
Other than that, thanks, Randy, for coming on. We always have such a fun conversation. Thanks,
Always.
guys,
Yeah.
for watching.
Thanks, guys.
And we'll see everyone in the next episode. Bye, everyone.
All right. Take care. Bye.